Hi guys, welcome to Unison's weekly fundamental analysis. So first of all, we're looking to the USD as usual. So it seems like it is increasing unlikely that the US Congress will reach an agreement on the new 900 billion COVID-19 aid before the deadline. Instead, it may pass a third temporary spending bill to avoid the government's shutdown at midnight. So US stocks fell from record high on Friday. So before the weekend deadline, a new round of stimulus agreements for the COVID-19 epidemic is still the focus of market attention. The fall in the US stock market and the uncertainty surrounding the negotiation of the stimulus agreement have boosted the safe haven demand for the dollar. Johannes Abraham, executive director of Biden's transition team, said, "We learned this week that the already limited cooperation between the two parties was suddenly suspended. We are concerned about this." While negotiations on the US economic stimulus plan have been delayed, the incoming chief economic advisor of Democratic President-elect Biden said on Friday that the COVID-19 rescue plan being negotiated by Congress should not include provisions that restrict the ability of the Treasury Department and the Federal Reserve to fight the economic crisis. Brian Dees, who will serve as the director of the White House National Economic Council in the Biden's administration, said in a statement that it is in the interest of the American people to maintain the Fed's ability to respond quickly and forcefully as we respond to an unprecedented economic crisis. Next, we'll look into the pound. So the British Prime Minister Johnson poured cold water on the prospect of reaching a last-minute Brexit agreement, saying that Brexit negotiations are very difficult, and Europe also said that there are many difficult to solve problems in the fisheries industries. Superimposed on the short covering and moderate rebound of the US dollar, the pound weakened against the US dollar. However, the optimistic news related to vaccine has boosted the risk-taking sentiment to a certain extent and limited the downside of the pound. The US Food and Drug Administration has informed Moderna that the emergency use authorization for its COVID-19 vaccine will be approved today, given the fact that the Brexit negotiations will enter the final juncture. Investors may avoid making big bets. So, Prime Minister Johnson also pointed out that the Brexit negotiations are very difficult and there are still differences to be resolved, and we must be able to control our laws and waters. The British position is that if there is a chance to reach an agreement, we hope to continue negotiations. The Europe must come up with something to negotiate. If the Europe does not agree, it will trade in accordance with the World Trade Organization's terms, the WTO. And the European Commission stated that there are many difficult problems in the fishing industry. The Brexit transition period cannot be extended. We will continue to do our best to reach a Brexit agreement. Barnier, the Europe chief negotiator for Brexit affairs, warned British Prime Minister Johnson that the UK must accept single market access restrictions if it wants to gain greater control over the fisheries issues. Otherwise, the two sides will not be able to reach an agreement. Furthermore, we'll look into the Europe. So after the US and the UK started the COVID-19 vaccination, the European drug regulatory agencies will speed up the vaccine approval process and the Europeans will start vaccination before the new year at the earliest. However, the sharp appreciation of the euro caused worries among policymakers. The European Commission uses its right to select an additional 80 million doses of vaccine in its agreement with Moderna. Moderna said that the European Commission has ordered 160 million doses of the COVID-19 vaccine so far. The first batch of Moderna vaccine ordered by Europe will be delivered in early of 2021. The member of the European Central Bank Management Committee, Francois, said in an excerpt from an interview released on Wednesday that the European Central Bank is ready to offset the impact of exchange rates on inflation. So, as the euro dollar exchange rate rose to its highest level since April 2018, European Central Bank policymakers are increasingly worried about the exchange rate issue. A rise in the euro will depress imported commodity prices and put pressure on already weak inflation. So last but not least, this will be the Forex calendar for next week. So remember to screenshot and take it as a reference. If you are trading in these days, as it will be fluctuate more high. Alright, so remember to put your stop loss. And that's all for today. Thanks for watching.